Hi, everybody. Chris Johnson here with Money Morning. I'm going to spend the next 5 to 10 minutes showing you 3 reasons why IBM needs to be part of your AI portfolio right now, or at minimum, on your AI watch list. Let's jump into it. That's right. You heard me correctly. Big Blue, IBM, should be part of your AI portfolio right now, even as the company prepares to announce their earnings this week. I'm going to show you 3 reasons. It comes down to the technology or the fundamentals that they're developing and where the company's going, the sentiment, or what everybody expects, because a lot of the time people won't tell you that sentiment is what drives markets higher and lower. And then we're going to look at the charts, the technical reason why you should be buying IBM or at least have it in your portfolio. So let's jump into the expectations and the fundamentals first. I'm going to go and look at the earnings because I already mentioned IBM has their earnings announcement coming up this week. And historically, this hasn't been a big deal for IBM. I think that could change, though. When we look at the trend, and this is over the last 5 years, the earnings results haven't really mattered to the market. So in other words, we haven't seen huge reactions from the stock in the following 2 weeks. When you look at 2 weeks trading after an earnings announcement, the stock is up 53% of the time. So it's almost a coin toss. So in other words, this isn't going to be too timely, or it could be actually, with the earnings coming down the pike here. 53% of the time it trades higher. The other 47% of the time it trades lower. When it does go higher, it goes up by about 6%. And when it goes lower, it goes down by about 5.5%. So again, nothing here really for the traders that want to jump in and out of the stock like they might with NVIDIA or some of these fast-moving companies, but it's the big picture that matters with IBM. Margins and revenue have been increasing over the last couple of quarters. The company has gone through a bit of a transformation here, kind of like GE did a couple of years ago when they had to change to the market. When you think of these big companies, it's hard for them to turn around very quickly. They're not as nimble as some of these smaller companies because they have to go from the top down in terms of those changes. But when they do make those changes, it's monumental and it results in big moves in the stock price over time. So again, I'm not looking for a huge trading opportunity. This is one for the long haul. So that's the fundamentals. Right now, we've seen the last couple of quarters where revenue and margins have been increasing, and the company is laying the foundation for their venture into the AI space. That's right. Even though AI is buzzing all over the place, companies like Microsoft, IBM, they're just starting their AI journey. And that comes down to the expectations right now. When I look at the expectations for a company, let's say like Microsoft, everybody's already expecting the best. It's a crowded trade. NVIDIA is the same way. When you look at the analysts that are recommending it as a buy, they're up around 90% or so. That's not the case with IBM right now. That's why the sentiment matters in a big way for the company in terms of where it's going to go, the stock price. Looking at the analyst recommendations, only 30% of the Wall Street analysts have it ranked as a buy right now. 60% in the hold and 10% in the sell category. So you've got 70% of the Wall Street analysts. And don't kid yourself, they move a lot of money around the market. 70% of them are basically sitting on the sidelines. They don't have any expectations. It's not a crowded trade. That's going to be a big swing for IBM over the next year, next 2 years. Remember this key point. 70%, it's around 76% really, of the US's GDP is based off of service industries. So I'm going to go back here. Think about the technology that's been developed and manufactured to make AI happen over the last couple of years, 4 or 5 years, right? That technology, NVIDIA, Intel, AMD, these companies getting into building the infrastructure is now going to be turned over to the service companies where we're going to see more money made off of providing things for you and I. They're going to monetize AI now after it's been built. This is one of those companies that is just a king of services in the technology sector. And the fact that Wall Street is right now underestimating IBM's potential is huge. The company, along with others, I've already mentioned Microsoft, Salesforce.com, they're going to surge onto the scene right now and kind of fill in all the other pieces of that AI puzzle. And man, it is going to be exciting, and IBM is going to come up that curve fast. What'll happen is those improving fundamentals are going to result in analyst upgrades and another upgrade, which is on price. Going back to that sentiment for just a second, and then we'll jump into the chart on IBM and my price targets and what I think you should buy in terms of buying the dip here if we get one on IBM. But before that, $148. I want you to think about that number. That is the Wall Street analyst target right now for IBM, the average target. When we look at that, the stock is trading above $170 right now. So they're already behind the curve in terms of their price expectations on the stock. What we typically see is a couple of months where the analysts will let the stock feel itself out above their average price target. And we've seen one upgrade here in the last week. That's going to start to show in terms of this rush higher because they're not going to upgrade it to the price that it's sitting at. Wall Street wants to look forward and think about those fundamentals improving. So you're going to see numbers like $210 come from the Wall Street crowd as they start to tell us where the stock is going to go. They are well behind the curve right now, and this is going to result in price upgrades of the stock as well as those buy, hold, sells. That's exciting news if you're somebody that's either holding IBM right now or thinking about purchasing it because it means that the stock is headed higher. How much higher? Let's walk into it right now. So, stock is trading just below 175. And when you look at this chart, this is a daily chart of IBM's share price. You see right now 155, and most importantly, 150 is where that red line I just drew was. That's where we broke out above the analyst recommended price and have just not looked back. The stock has consolidated here between $165 and $160. And remember this, when it comes to price movement, if you want to do the most basic technical analysis of a stock, look at round numbers. In the case of IBM, round numbers like 160, 150. When we break through that had a little more to do with the analysts and breaking through their target price. The next one in line is going to be $200. That's my easy target. That's a short-term target. But let's think. Earnings are approaching. I showed you 5% downside, 5% upside on average for the stock. It trades kind of even. Worst case scenario, IBM delivers results that are below expectations and the street takes back some of this price. I expect that we're going to see some support right around this $160 level, and the worst case, $65, and the worst case is $160, and that's where I become a buyer on the dip. That's one of those terms we love to throw around, and it's a term that the market loves. They love to buy on a dip, and right now, with a runaway price like this, people are going to look to do exactly that. So in the case of a bad earnings report, I want you to eye $160. And absolute worst case, you start to dip down to that $150 where the targets are for the analysts because they're still going to be looking to do the same thing as you and buy on the dip in terms of upgrading their price. Longer term, where do I see IBM going through 2024? I see the upside target being 20 to 40% on the stock, maybe even more than that. I think you're looking at a stock price that's going to go up to $240, $250 from its current level, right around $170. And that includes maybe an opportunity to buy it on the dip, which I encourage everyone to consider. So there you go. A little bit of a base case for IBM. Your buy the dip level is going to be somewhere around that 160, 150 level. And expect it to run to the upside of 240 and higher through 2024 as the service industry starts to take the reins from the technology developers in the AI space, and the analysts start to catch up with what the price is actually doing. Technicals, fundamentals, and the sentiment. All three of these put together, and the underestimation of what IBM can do makes for an explosive trade in 2024. That's it for now. Make sure you like and follow just to get more content exactly like this in terms of where not only IBM, but other stocks are going. I'm Chris Johnson with Monday Morning. I wish you the best trading success.